Hello everyone, welcome to Just Invest Today. And today we're going to be talking about Li Lu's new interview. And in this video, we're going to go over the potential for a stock market crash and what to do and how to prepare for it. So you guys know Li Lu. He's a famous value investor under the tutelage of Charlie Munger, Warren Buffett, and he has so many insights in his new interview that he did. And guys, after go look at that interview, digest it, watch it 3, 4 times. But today we're going to be talking about the potential for a market crash and how to prepare yourself. So, firstly, Levy goes over the human nature and how people think about the markets.
And it was driven by human nature. As long as human nature remained that way, it will never change. It will always be with us. As a product of evolution, we humans are basically run not necessarily in a very rational way. No, we're very good at rationalization, but we're really not very good at being rational. And we always are looking for in a sense, we're governed by some set of hard-coded instincts, and we're looking for a zero sum, and we're looking for fast money, and then you got really totally scared when things goes against you. So that's basic sense of greed and fear would always drive the financial market up and down. Particularly when it comes to money, humans are very funny. They tend to evoke the primal part of human nature. And so particularly related to financial market, a security market, money, that human tendency of the extreme instincts become more amplified and more extreme. And that's why the financial market from the very beginning has always been characterized by boom and bust and will remain so. Now, how do you deal with such an environment that will be constant? Well, one way to deal with that is to anticipate that always on the corner at all times. And that's basically our attitude, that financial crisis will happen all the time. People will always be driven by fear, by euphoria, by this extreme kind of up and downs. And so we're looking for businesses that are capable of living through that, and even businesses that could really thrive in that environment, in the sense have a certain characteristic of anti-fragile. So that up and down becomes somewhat friendly for us, in the sense that when our favorite company is on sale, discounted by 50, 60, 70%, if we have money, we'll buy more of it. If we don't have money, it is a hallmark of a good investor. You can sit through watching your portfolio down by 50% and not being affected at all.
Guys, this is so important, and you always just gotta re-memorize and re-pat this back into your mind because we have to understand human nature, the human nature of us, the how we develop evolution. Guys, we're like motivated by greed and fear, especially in today's market. So fear, when we see stuff happening, when we see stuff going wrong, it's in our best, we always try to look out for us or in our best interest of what we want to do. If we see something happening out of fear, we're just gonna revert back. We're not gonna reassess the situation. We're afraid to lose money. It hurts, it pains us when we lose money. So soon as the stock market sees a little bit of dips, people are gonna be screaming, they're gonna be running out that theater. And guys, you gotta remember that the the people who pretty much run the market, hedge fund guys, and these huge hedge fund guys have bosses. All the top hedge fund people all have bosses, and they gotta go to them quarter to quarter, maybe even monthly. they have these monthly data points that they gotta reach, right? Because they want people to come and invest in them. So they gotta show that they're actually earning money. So if they see these stock market dips, they're gonna fear and they're gonna be running out of these markets. So fear is a huge leverage point for the human nature, and he talks about fear. And then when it comes to greed, we get so greedy in the market, and that creates all this euphoria when they see other people doing good, they want to jump into the bandwagon and get all that. So, guys, we have to understand the market of the human nature of the market that is going to be programmed for greed and fear. So, we got to prepare our minds already that it's going to happen. There's going to be boom and bust cycles. So, we have to anticipate that. Always invest anticipating some kind of market crash because it's going to happen as long as humans are the ones running this market. So, what do we do? The first thing, guys, we do is that we get these anti fragile companies, meaning that we buy these companies that can endure the ups and downs of the market. They actually get stronger once all these financial crises is gonna hit, with all these whatever pandemics gonna hit, whatever any oil crisis or anything like that. Any of those huge problems that can occur in the market that can kill your stock gains. We have these anti-fragile companies that are just gonna keep turning and turning no matter what happens in the market. And that comes down to like example like Costco. Like if you look at the Costco chart in March 2020 when that pandemic hit, it barely budged, guys. That's the companies we want. Those companies that they don't doesn't even matter what happens in the market or what everyone's doing. The company is still gonna thrive. And those are the type of companies we want. So that's our holy grail is finding these anti-fragile companies with strong moats that can sustain these 60% dips if it happens. When these 60% dips happen, guys, go to yourself and ask yourself this question. Look at your portfolio and see what companies you have in it right now. Can you really tell yourself that if any of these stocks dip 50 to 60%, that I would be happy? Meaning that if I had money on the side, I would still invest in these companies. Or are you the person that if you see those stocks in your portfolio dip, you're going to be scared and you're just going to throw them away, you're going to sell them off? Which one is it? You got to be intellectually honest with yourself. And that means that you're going to be understanding the company. Because when you truly understand that company, the 50 and 60% dips will make you happy if you have money on the side. If you don't have money on the side and you're fully invested in the stock market, if your stocks dip 50, 60%, are you going to be calm and collective? Are you not going to care because you know how strong your company is? So look in your stock portfolio and see which one is it. Are you going to be scared of these 50 to 60% dips, or will you be happy about these 50, 60% dips? And that's the true understanding of the companies you own in your portfolio. Are they anti-fragile? Do you know they're going to survive these huge dips? So when you have that type of temperament and you understand your business, then guys, you're not going to be affected. And that's the approach that we want. That's the true testament to know how you are as a value investor. So we understand our temperament and then we understand the human nature of the market. So the market is going to eventually test you. The market is going to test you. So when the market tests you, when the 50% dips happen, 60% dips happen, that's how you're gonna know if you truly understand the company and if this company is really good. Is it a bad company, a good company? Is this company gonna compound my money over time? So guys, look in your portfolio, see what kind of stocks you own, and see if you can survive these 50% dips because guys, it's gonna happen. It's only a matter of time. And you're not gonna know when it's gonna happen. It will come as a shock. Just look what happened back in March. The 30-40% dip happened so quick, and that could happen again. So make sure you understand the stocks that you own in your portfolio. And if you truly understand them, you'll be happy. You'll be glad from these 50% dips, these 60% dips, because you'll understand that you're able to buy these stocks at a cheaper price. So guys, if you like this video, can you please like it, subscribe to my channel, and I'll get back to you in the next video. Peace.